Hello everyone, this is Juan Sarmiento and today is Friday, December the 2nd. Okay, it looks like the markets are very close to my trend line. Look at that. Isn't that interesting that it went up to that point, the next day it gave me this what is called a doji, which means it's a weakening of the trend, and then the next day opens lower. So we could expect a correction here, perhaps going to the Ichimoku cloud. But look how well ahead of the Ichimoku cloud. The leading cloud is turned yellow, which means it's bullish. And we are right there at that edge. We could expect a small correction and then a breakthrough or a reversal, which is, possible. So those are the two scenarios. This is a decision point and we have to see how it goes in the next few days. In the meantime, we are back into the 400s. Let's go to our Analyze tab and see what is our average price, $424. And what is our current profit loss scenario here. It says here from the opening we have lost $1,500, and this year has been particularly bad. Okay, but overall it's less. That means the year before we did well. Okay, and remember, this is a long-term investment. This is not to take your money in and out. It's a commitment to save money, trade in the stock market without being too involved. It's an easy way without much commission, and you are then involved in the stock market for the long run. Presumably at some point one day you want to be have a nest egg, let's say 10, 15, 20 years from now. Okay, that for me is a little too late because I'm older, but this would be a perfect way to put new money in, 500 every week, or perhaps 200, or whatever you can afford, one bit at a time, and then, well, you pay $400 for one share, and so $405. Perhaps you put this 400 or whatever it costs every week. Whatever it costs, that's how much you're paying. Okay, so let's add. I'm going to add, you know that this is a paper trading account. It's a pretend money account. So I'm going to adjust the cash and pretend that I'm adding $500. Okay, that's simple. We are doing this as an experiment. I may be doing this in my own account. You never know, but this is what it is. This is the results that you would get in real life if you did that for the long term. The markets go up, they go down, you seem to lose money, you don't understand why. Well, because eventually at some point this market is going to go to new highs, and while the market was low we were buying anyway, and now it's above 400, but when it was 300 it was a different thing. Disregard that, that's from another account. Okay, so let's do this at this $500. Okay, and there it is. It says option buying power or cash, that $500 plus the 38 cents that I have already there, and now I'm gonna buy. Just click here and say buy. But instead of buying the 100, which will be a big chunk of money, we're just gonna buy one share at whatever price is at the market. You can put a limit so that it doesn't go out of control, and wait until it gets filled. There it is. So we have added $405. That's one more. If we go to the Analyze tab, we see that now we have 80 shares of the SPY. Okay. If you have more money, another approach would be to buy cover calls. Let's say in any other, let's say Apple. You say, okay, Apple is cheap, you are thinking, and you are going to buy a covered call with 35 days to expiration, 28, 30, somewhere around 30. I would say 35 sounds good. The current price is 46. Well, let's buy the 45. So you say buy custom, you say buy cover call, cover stock. And that's another way to invest in the stock market. And this is, let me delete that, that's not important. This is what it would look like, a covered call. You can see that our profit is limited, but our loss is here at $140 when the stock is trading at 146. So we're paying, essentially we're paying $130 because we are selling a call. And that's another approach that we could, please disregard that, that's from another account. Okay, we could do this covered call as another strategy, but I would recommend that only if you believe that the stock is very low, and perhaps you believe that Apple is at a price that you would like to buy the stock, but you are afraid that the market may be weak, so you're selling a call. But of course you would make some money, but not a whole lot. It says you will make, in this particular trade, $500 at the most. You could still lose money. So it's not that a great solution, but it is something that is recommended when volatility is high. In this case, the volatility for Apple is in the 30s, so it's not my preferred stock to do that. But say if it was here at 48, here at the bottom it would have been perfect. Here it would not so perfect, but here the volatility would have been high, and that is in advance of earnings. Volatility gets really high and then collapses. So that's another strategy that we might do someday. Okay, so as far as we are concerned, our losses are being cut off a little bit, and we keep on adding to it so that eventually when the market does break to new highs, and it will, it's someday, I don't know how soon, but in that case then we will be happy. We'll be rejoicing, because as the market was here at the bottom, we were buying as much as if it was here at the top or back here, and now we are at the top of the range, and there is the potential for it to break out to new highs, break through this trend line, and that will be good news for the market overall. Let's see what it does. Okay, thank you very much for joining me. See you next time. Bye bye.